Hi friends and welcome back to Arctic Money channel. I hope you have been having great summer so far. Myself, I'm a little bit having a summer flu here, so I apologize for my deepish voice right now. Due to this fact and due to the fact that not much has happened in the market since my last portfolio update in last spring, I will keep this video pretty short, but without further ado, let's get into it. As you can see in front of you, this is from this year's March, so the spring portfolio update I did last time. You can just have a quick look how my portfolio looked back then, how my portfolio has been doing against S&P 500 index itself, dividends reinvested, as well as index investor in monthly additions in S&P 500 with dividends reinvested. On the right hand side, if you want to take a closer look how it looked back in March, freeze the video here, stop the video here. But now, without further ado, we check how my portfolio looks today, or rather yesterday, when I was doing these PowerPoint slides for you. And here you can see it in front of you now. So 9th of July, yesterday, my portfolio looked like this. Let's unpack the portfolio real quick. I have basically three big positions in my portfolio: Flow Traders, liquidity provider from the Netherlands, 20%, Origin Enterprises, agriculture-related businesses from Ireland, 19%, and then let's say my biggest position is Yellowcake, Sprott Physical Uranium Trust, and Global X Uranium altogether, making my third biggest position in my portfolio, that is price of uranium. To say it really simply. On top of that, I have two medium-sized positions in my portfolio now: Kamux, used car sales in Germany, Sweden, and Finland; Dr. Martens, the iconic boots. Those positions are the same size at the moment. And then I have smaller positions in my portfolio: Hims and Hers, 7%, Biomedical Laboratories from Japan, 4%, and Energy Services of America, ESOA, 3%. That's my portfolio. Yesterday, today, how do you want to say it? Not much to say about it. It hasn't. I have only since last spring I have sold Crocs. I think I did a minor profit gains there, but nothing that moves the needle. Really small. I just felt that when I got a chance to get out of it, in my opinion, with an okay price after all the craziness with the Trump tariffs going on, and how Crocs business model is very dependent on those tariff decisions even. So I just wanted to get that position out of my portfolio. So I started investing in 2018. I am not happy with the profits I have made. As you can see, my portfolio is today plus 39%. Annualized gains are 4%. This compares to S&P 500 with dividends reinvested the same time plus 151%. Annualized, absolutely amazing, 13%. And then this is a different thing. Index investor with monthly additions, the same amount in S&P 500, which is and also dividends reinvested like there on the yellow text, plus 64%. So index investor is beating me in S&P 500. This is my benchmark. This is the real benchmark I want to beat. In decades time, I want to beat S&P 500, the index itself. But for me, my target is to beat S&P 500 index investor. There was a time last December when I was actually ahead of index investor, but things changed since then. Now, as you can see, plus 64% for the index investor, and for me, plus 39%. It's not a huge difference. Things can change fast. As you can see, my portfolio is relatively small, consisting of like maybe 8 positions. So obviously, big things happening with Flow Traders, Origin Enterprises, or uranium can change my profits quite quickly even. And this same, most likely S&P 500 as less volatile asset class won't react so drastically like my portfolio. So things change fast. So how do I see the situation? This is my portfolio. I think I will beat the index investor in the coming months, maybe years. Of course, I was hoping already last December that this is the point where I leave this index investor behind me. Did not happen. US stock market is still red hot. I have been saying for after I think 2022, I have been saying that US stock market is overvalued. I still think it is overvalued. How much? Somewhere between quite overvalued and very overvalued, I would say, but overvalued nonetheless. Of course, I think my portfolio is undervalued. That is for sure. Of course. And I'm just waiting for the things to change. You know, as Wayne Gretzky said it, or was it Wayne Gretzky, the great ice hockey player? You don't need to go where the puck is right now, but you need to go where the puck is going next, or something like that. This is me positioning myself for the future. Obviously, I feel like just to say some random things, Flow Traders is a volatility play, expecting volatility ahead. Then rest of the stocks in my portfolio, I feel like they are good value investments. A little bit growth company with HIMS there in the mix. And also I feel like there is a structural deficit in uranium, and the uranium for that structural deficit to go away, spot price of uranium needs to go higher. Also, uranium working as a great inflation hedge as a commodity. I am expecting that to happen. Basically, that is the quick rationale with these positions in my portfolio. Let's see what the future brings. I'd like to just a little bit defend myself with me benchmarking myself against S&P 500. Everybody knows that since 2018, S&P 500 has been the hottest stock market in the world. But I like to challenge the big guys, and I want to keep the benchmark level high. And this is S&P 500 in today's world, and in the world we have been living since 2018. Naturally, as said, I was last December ahead of index investor. I am not far behind. Of course, I would love to see my profits after 2018 being much higher than plus 39%. But this is value investing. Patience is one of the key things you need to have. You cannot dictate the stock market. It does what it does, and it does what it does for years. You need to stay patient. You need to believe in yourself. Position what do you see being the future, and this is what I've been doing, and I am waiting to get my rewards. Maybe not this year, but hopefully soon. You will see it. Hopefully, I will see it. Other things about cash levels at the moment. I don't have much extra as I didn't have last spring, meaning I'm almost fully invested. And then I have been giving you in my recent Arctic Money videos a little bit more information about my investing, and that's the blue box in the left upper corner. You can see these stocks in front of you. This is my only stock portfolio I have. What you see in front of you is 78% of my net wealth. So I just want to, for the new viewers who have probably not seen my videos before, and for the old viewers who have been watching, I felt like this is an information I want to give you now, that I am really heavily invested in these companies with my personal wealth, and I have great conviction in what I'm doing, and I'm doing this thing really seriously. So I hope I get at least a little bit credit of that transparency giving to you here. Some people have sometimes asked me why won't I give like euro or dollar amounts where I've invested, but I don't think that adds any value to anybody. It doesn't matter what the euros or dollars is. It matters. I think it only matters how big of portion of your net wealth is in this game I'm playing, and as you can see, I have a huge portion of my net wealth in these stocks you see in front of you, 78% today. I hope that's a good level of transparency you value. As said, not much has happened since last spring, so of course, a lot has happened in the world since last spring coming to this July, but in the stock market, in my portfolio, in the US stock market, There was Trump tariffs, there was wars, there was lots of things happening. We went down and we went back up in the S&P 500 and basically flatlining the whole spring until summer. So as said, not much to update here actually for you guys. I'm keeping my course here. If you're interested more in the stocks you're seeing in front of you, I have videos of all of them on my channel Arctic Money. Go and search there. Last video I did was risk reward matrix of these stocks in my portfolio, but as well the stocks I'm keeping on my watch list, where I try to a little bit map out what I think are the best opportunities in the market at the moment. So if you're interested in that, go check that video. And yeah, just to conclude, when you're looking at Shiller PE or Buffett indicator, they are saying that the US stock market is extremely overvalued. If we are entering, for example, to a world where inflation stays higher than 2% for extended period of time, obviously that changes valuations, and today's prices of S&P 500 might not be overvalued. They could even be fairly valued. My answer, or what I'm predicting, is that US stock market is somewhere in between overvalued and extremely overvalued. As you can see, I don't have much of my money in US stock market at all, for various reasons. This is my portfolio, and I hope I can beat the index investor really soon again. Not much to add here. Let me know in the comments if you want to hear about some topic more, and I will consider that for the future videos. But until then, I see you in the next video. Bye bye!